Trading Analysis by AnsariOnline. Today we're providing a trade analysis and recommendations for trading the British pound. The recent test of the 1.3130 price level occurred when the MACD indicator had already significantly moved down from the zero line, limiting further downward potential. A subsequent test of 1.3130 happened with the MACD in oversold territory, triggering by scenario number 2, although the pair didn't show a major upward move. News of the UK's October inflation matching forecast triggered a decline in the pound. This market reaction shows investors are highly sensitive to any signals about the Bank of England's monetary policy. The fact that the actual data match the expectations is not negative in itself. However, given the current situation, where inflation still significantly exceeds the 2% target, market participants perceive this as a sign that the Bank of England may not rush to ease monetary policy. While this fall in the pound may be temporary and driven by speculative sentiment, the pound's long-term exchange rate hinges on fundamental factors like the British economy, trade relations, and the geopolitical landscape. Later today, all eyes are on the release of the minutes from the latest Federal Reserve meeting. Investors dissect every word of the Fed minutes, seeking clues about the future path of monetary policy. Discussions on inflation, employment, and economic growth prospects will be key. U.S. trade balance data is also important. A widening trade deficit can signal declining competitiveness of U.S. goods, negatively affecting the country's economic growth. John Williams' speech could provide more clarity on monetary policy expectations, and his dovish stance makes his remarks crucial for investors. Turning to intraday strategy, the focus is on scenarios number 1 and number 2. By signal scenario number 1, a buy order is planned around 1.3127. targeting a rise to 1.3165. Near 1.3165, consider exiting long positions and opening short positions, expecting a 30-35 point reversal. Pound growth today is contingent on a dovish stance from the Federal. It's crucial to ensure the MACD indicator is above the zero line and rising before buying. Scenario number 2 involves buying if the price tests 1.3103 twice, while the MACD indicator is in the oversold zone, limiting downward potential and leading to an upward reversal, with growth expected toward 1.3127 and 1.3165. Sell signal scenario number 1. Selling the pound is planned after breaking below 1.3103, anticipating a quick decline. The key target for sellers is 1.3075, where shorts will be exited and long positions opened, expecting a 20-25 point rebound. Pressure on the pound will return if the Fed takes a hawkish stance. The MACD indicator should be below the zero line and declining before selling. Scenario number 2 involves selling if the price tests 1.3127 twice, while the MACD is in the overbought zone. This limits upward potential, leading to a downward reversal toward 1.3103 and 1.3075. Let's clarify the chart. The thin green line marks the entry price for buying. The thick green line is the take profit level, where further growth is unlikely. The thin red line is the entry price for selling, and the thick red line indicates the take profit level for short positions. The MACD indicator is critical, and it is important to rely on overbought and oversold zones when entering the market. Important considerations for beginners. Make entry decisions cautiously. It's best to stay out of the market before major fundamental reports to avoid sudden swings. If trading during news releases, always use stop-loss orders to minimize potential losses. Without stop-loss orders and proper money management, large losses can occur very quickly. Remember, successful trading requires a clear trading plan, like the one presented. Spontaneous decisions based solely on the current market situation are generally a losing strategy for intraday traders. Disclaimer: the market analysis provided here is for informational purposes only and should not be construed as financial advice or instructions to make a trade.